As an investor, you are always fighting against two powerful forces. One is how your investments do in real life, and two, how do you react to it? What are your emotions and behaviors to how those investments do? And the danger of these two forces is real. You can have the perfect investment and you look at your portfolio on a bad day, you decide to sell and miss out on what is a very good opportunity. The internet is littered with stories of people who sold Nvidia, sold Apple just on a bad day and missed out on literally millions of dollars. Or on the opposite side, you could be filled with enthusiasm and overconfidence and continue to hold on to a losing stock and just believe that you have the best information possible. So what is the best way to have confidence in your investing strategy and have some true trust in what you are doing is going to work for the long term? Because you have to have some strategy, something to help guide you if you're going to be a long-term investor. I've got 3 things that are going to help, and the first one you are not going to expect. Let's go ahead and break it down. I'm gonna jump straight into it. The answer is not index funds. Yes, index funds can be a very good investment. However, as I mentioned in the intro, it can be a perfect investment, but if you don't have the right mindset, you can still sell out of it. We saw this happen during the pandemic by a lot. We also saw this when tariffs were tearing up the stock market during Liberation Day just a few months ago. You can check the comment sections here and scroll back during April or whenever that was, and people were selling left and right and people were panicking, and then months later, weeks later, stock market hit all-time highs. Your 401k might have been in a very good spot at that time and then you sold out of it. Some people sold out of it. If you was watching this channel and subscribing, it's your opportunity to do so right now, you were fine, right? But people had the right stuff and sold out because their mindset and their attitude wasn't correct, right? They weren't confident in their investing strategies. So what are the things that we can do to amend that, to correct that in some way? One way that I like to do this for myself, and I do this in my courses and things like that, is research, but it's not the research that you are thinking. Some people say do your own research and look into the stocks and look at charts and things of that nature, and that may be good and fine, but we usually have our own interpretation of what a stock might do, or even take a company like Tesla, or even take something like Bitcoin. People are very passionate about Bitcoin. I can look at it and think one thing and do my research. You can look at it and do your research and think something completely different, and we can come to different conclusions. I don't need that for my entire investing strategy, again, especially for something long term. I need something that is as set in stone as possible, and preferably something as neutral and unbiased as possible. I said as possible, not something that is totally unbiased, because if it's a human involved, it's usually not possible, right? So what I like to do when I'm coming up with a strategy, a plan for investing, I like to do research from researchers. And what I mean by that is I go and look at studies from universities, whether it's UCLA, whether it's Harvard, or something like that. So for example, when I tell you guys about insider buying, where do you think I got that from? I got that from a university study. When I talk about momentum stocks, or I talk about buying companies within the S&P, but they are in the top 10% of performers, where do you think I got that from? That is from a UCLA study, right? It could be from the University of Nebraska study. These are the things that I search for, and that gives me a bit more confidence. Confidence, not perfection, is what I am looking for. And the reason why that's important is because, one, it's not just me looking into stuff, it is researchers, people who do this for their day job, and those papers are peer reviewed. So it's me looking at it and reading it, it's them looking at it and reading it, and then it's all of their peers looking at it and reading it too before that thing gets studied. And it's 3 layers, you could argue it's probably even 4 layers, of people continuously looking at that particular thing to verify that information. Also, depending on what studies you're looking at, those things can be tested up to 10,000 times or more. So I can only test one thing or try one thing at one specific time, right? I'm stuck in time. I'm doing this video on this day. I cannot do this exact same video or go back and invest my money in 1980. I don't have that opportunity, right? I don't know what it was like. There are some people who have only started investing in 2025, right? And they can think, oh, I'm an investing expert. We saw those quote unquote investing experts in 2020, and they could throw a rock and hit any meme stock and thought they could do literally anything. And then in 2022, things didn't work. A lot of these research studies can say doing X, Y, and Z over the last 100 years, here's the probability of this particular thing happening. So for example, a 70% stocks and 30% bond portfolio might be the all-time best portfolio mix. For example, there are studies out there that will show you and give you a bit more confidence in this is what tends to work. Again, confidence, not perfection. A little bit more assurance that, hey, I don't need to be as anxious. Maybe I don't need to sell because in the last 100 years, there have been high tariffs before. And that is true. There have been. In the last 100 years, we have seen a Great Depression. What did stocks do at that time, and how did things even out? There have been inflation. All of those things can be accounted for depending on what studies you are looking at. So that is the type of research that I like to do and incorporate in my investing strategy, which is why I tend to be consistent but not perfect when it comes to the stocks that I do choose. And for those who have been subscribing, you guys know we're pretty good. We're pretty good with picking out some stocks in whatever year it is that you want to choose. And it is also why when I come down and I sit here and I choose stocks, I don't say, hey, hold this stock forever and ever. I'd like to, but I say, hey, 6 months, that is as reliable as I can be, because that's what the studies say, right? And then I'll try and give it a year, but that is as realistic as I can be. I can't say, like, I would love to hold a stock for 5 years, but I can only renew that contract, if you will, for 6 months at a time. Because from the studies that I have read from like the UCLA School of Management, say that that's about as predictive as they can be on a reliable basis. About 6 months to a year. And that's about it. So once that time is up, I'll look at it again. And that is how I run my process, okay, from the papers that I have read, because that's how I want to run my business and my portfolio. That's one thing that can give you a bit more confidence. But also coming into confidence, right, you are going to have to choose the right investments, and we'll get to that. But then there's the part of overconfidence, right? You don't want to have too much confidence. And to avoid that, you want to make sure that you, A, build in room for mistakes. Yes, you can choose a bunch of great stocks. Yes, you can add a lot of research into your investing process. However, you still want to build in that room for mistakes. What do? I make sure that I still follow my 5% rule, meaning I don't put any more than 5% in any one single stock. That's me. Now, could that limit my returns in some cases? Yes. For example, I could have been a whole lot richer if, 6 or 7 years ago, I put way more money in Bitcoin. I didn't. That's me, because that violates my rule. I said I'm putting no more than 5%, and that 5% has gone up and down, but I have not gone past that because there have been years where Bitcoin has dropped by 65%. I think that happened in 2022. I don't like to see that. I don't know if I can sit here and stomach that. And then we also saw what happened to FTX and everything else. Like that did happen, right? I had an app, I forget the name of it now, where it got locked up. I wasn't able to get my stable coin out. If I had 10 or 15% of my wealth locked in an app that I can get my money off of, like what if I had my money on FTX? If it was 15 or 20% of my money, I couldn't get it out for years. That's wild. If it was only 5%, I can be okay with that. I'm not gonna like it, but I can be okay with that. And that's going to afford me to be wrong in stocks that don't do well. And we have talked about stocks that I've lost money on this here channel. We've talked about stocks that I have done well on this here channel. But having that diversification, having some rules in place, that is what's going to help you to say, hey, look, I've got 15 stocks, I've got 10 stocks. 8 of them are going to do great, but those 2 that don't do well, it's okay, because these other 8 have done incredibly well. I've afforded myself a little slack. I've afforded myself a little bit of room. The second part is, again, don't be overconfident, right? You will never hear me say this stock is guaranteed to do X, Y, and Z. I can guarantee you that a stock is going to change. Right? I can guarantee you that. And it's going to go up and down. I can guarantee you that. There's only two things I can guarantee you. And savings account is going to pay whatever they say it's going to pay. That's it. And FDIC insurance. That's it. That's all I can guarantee you. But I can't guarantee you a return. And I can't guarantee that a strategy is absolutely going to work. Even when I say, yes, long-term investing works, even when the stock market fell, even back then I said, yeah, I think it will recover at some point. Did I think it was going to recover this quickly? No, I didn't. I don't know if the stock market is going to be up by December of 2025. I hope so, and it looks like it, but I'm not going to be overconfident and say, yeah, I think it is. Let me just continue to pour even more than what I already would have. No, I'm going to just stay on the regular path that I was and not be overconfident. So you want to make sure that you have that research backing you and stay on the path, as opposed to say, hey, I am perfect, my strategy is perfect, and just go above and beyond what you normally would. Build in those things to say, hey, if I'm wrong, this is what I'm going to do. I'm not going to violate my own rules that I have for myself. That is how you can become a better, more well-rounded, and truly confident investor. Not overconfident, not arrogant investor. That is where you want to be, because I've seen so many people, whether I've met them in person, had them as a client in the past, or even in the comments, where it's like, yeah, I had Broadcom back in the day. I've had NVIDIA back in the day. I got scared and I sold. I wish I would have held it. You had a very good investment, but you got scared because you weren't confident enough in that strategy. This is what you need. All right. Now that you have all the stuff you need to be a confident investor, you need a stock, right? You might need some ETFs. You need something to buy to be confident in. So what are those investments that you want to consider looking into and perhaps buying? These are the videos that you want to watch next.